Good evening, everybody. Let me go ahead and just the Discord up really quick. I want to go ahead and share this in the channel. Okay, let me go ahead. Just 1 minute, everybody. Good evening, good evening. Okay, so I do want to clear some of the drawings that I got going on SPY because that is for our day trades. So just give me a couple seconds. Just want to make sure I'm not going to be deleting anything crucial in here. No, cover those all later. Okay. Going to delete all. Alrighty, so just give me 1 moment. I want to grab my notebook and everything and sure everybody has time to join up. Hold on, I think I have the wrong notebook here. Hey, Tented, good evening. Give me 1 second, I grabbed the wrong notebook. I need to grab my other one. 1 moment. Alright, everybody, sorry about that. Got the right notebook. Hey. Okay, so good evening. Okay, we're going to be going over the 3 to 6 month trends for, let's see, SPY, semiconductors, tech, corporate credit, both the high yield and I always forget the exact name, the investment grade. We will also be going over, let's see, I have the order on this kind of messed up, sorry. We'll be going over oil. So I know there's a lot of volatility with oil, which is causing it to obviously climb quite high, but we will be able to chart it now that it has been trading within that volatility for about a month. So we'll be able to have a fairly solid idea of what we will expect out of the next 3 to 6 months. I want to go over bonds. There's a lot going on with oil again, which is heavily affecting the treasury yields. So I think it's a good time to readdress what's going on with treasuries. Then we're going to quickly go over the DXY. I did want to cover the yen as well, but I might kind of include that within the DXY. And then I do want to cover volatility, so we'll be going over the VIX. Then I want to cover precious metals, so specifically gold and silver. But if there are others you all are interested in seeing, then I can cover those as well. And then I will be taking a quick look over Bitcoin because that's fairly important for the overall equity market. So yeah, I believe someone asked me to look at Tesla as well, so I will be doing that. If there's any questions during any of this all, feel free to type in the chat as I'm pretty much just going to be rambling about what I'm seeing for the trends. Now, for some of these, I will have to adjust the drawings. So if you see me just messing with the drawings for a moment or being silent, that's not because I'm mute, that's just because I'm looking at the long trend. So for the long trend, and I am going to kind of preface this in a second, but for the long trend, we will be taking a look mostly at the weekly and monthly time frame and doing a lot of correlating with the moving averages with, those levels. And from those monthly levels, we'll be able to build on that with the weekly and daily time frames to create a more cohesive story of where we're really seeing the trends headed. So that's the overall idea. Now, with this is kind of where I'm going to step back for a moment, is that moving averages and Bollinger Bands tend to work the exact same way on every single time frame. And what I mean by that is we're going to go down to the 1 minute time frame here, is that generally, and I just want to turn off the moving averages for a moment, the market likes to trade from the lower Bollinger to the upper Bollinger, to the lower Bollinger to the upper Bollinger, rinse, repeat. Doesn't matter what time frame we do this on, that's going to be a very consistent trend. Um, again, could be the hourly, it could be the 1 second time frame. Your algorithms are going to be moving in the same way. Now that doesn't mean, for example, if we're having the lower Bollinger pushed on the 1 minute time frame, that we're going to be seeing that happening on the hourly time frame. That's not what I mean by the same type of movements. So don't take that as each move is going to be correlated together. Just understand that each time frame, within that time frame, the price action is going to be trying to trade from the lower Bollinger, to the upper Bollinger. Um, Again, each time frame can give us different structures, but that does allow us to create a more cohesive story. So playing into that, that's why our monthly and weekly time frame is very, very important when going over the moving averages and Bollingers for long-term trends. Because just on the monthly time frame here, you know, just off of looking at it without any skills of knowing how to read the charts too much, you can already see that we haven't tested the 20 mile in quite a while. Last time we tested it was in April 2025. So what's coming? Very, very likely that 20 mile test. Now, the reason why we can assume that 20 mile test is because we have had extended pushes into the upper Bollinger here. As you can see back in here, kind of that same type of pattern before we have the 20 mile test. Now, again, on the 20 mile here, we generally don't have to test it for about 20 sessions. That's what it means by the 20 mile. Even if it's called the 20-day moving average, when we swap to the monthly, that's still going over 20 months. Okay. So with that said, we're starting to get close towards pulling to this price range. Okay. Now, this price range is still vague. Okay. And we're actually going to mark this with a box. So we know that very likely market price is going to try to gravitate to this range. Okay. And I do just want to delete some of these for a second so you can hear my daughter screaming. She is being very silly tonight. So with this said, we now have a very clear range marked for us. We have our 20 mile range, and we're being very vague about it. We aren't really marking anything specific in here too much. We're marking quite a range below it, quite a range above it. We're really not setting anything super specific. Okay. Now, taking this back to the weekly, we see, okay, weekly time frame. And again, this is on SPY, and I want to make sure this isn't covering anything important. Hold on, I want to pull this up just a bit so that you guys can actually see the months correctly. It's hard to see the months. I'm trying to adjust this 1 second so that you guys can see the months and everything a little better. second, everybody. Apologize for this. Okay, if I remember this correctly, I should just be able to that. Okay, you should be able to see the months a lot better there. Perfect. Perfect, perfect. Okay. All right, so now we are on the weekly time frame, and the weekly or the time frame will be showing up here. Usually I do have something to show that time frame a little easier. See if the moving averages. Now that's something I'm gonna have to fix with the signs. I do like to use Weeble. Um, I will be using TradingView as well once I get the, my PC set up, but just on the laptop, Weeble works very, very good. Now, one thing I do like to do with my candles, I'm sure that some of you might see that these candles look different. I use the Heikin Ishi candles or whatever they're called. Um, I prefer these to the standard candles just immensely. I can't really explain why. I feel like the price action is shown 100 times better with these candles versus standard candles. Um, I made this change back in early 2023, and it's been just a huge game changer for me. So, um, your candles might look different. That's because I'm using the Heikin. With that said, okay, we're on the weekly time frame now. We have this range, which is that 20 MOV range on the monthly time frame. We know that very, very likely the market is trying to aim for that level. Okay. We know that within the monthly time frame, this is telling us that I just want to count just to be 100% sure. So, yeah, so 11 months since that last 20 month test or 12 months, excuse me. So we're starting to get near that range. It can be anywhere in the next 3 to 6 months. Okay. With this range pulling up towards the level we're at, this also tells us that this could pull all the way up, very likely towards that range. And I want to mark this in purple just to really show that that's the 20 mile there on the monthly time frame. This will continue pulling upward as long as the price is not at that level. So that's something we can count on is that the 20 mile will be pulling up. On the weekly time frame, we can now correlate this a lot better to a potential move. Okay. Now, what's near this level? Well, we have our lower Bollinger. That got marked a little wonky. And I want to put this in white just to kind of show that. We have our lower Bollinger, which is starting to open up to the downside. And we know it's going to continue opening to the downside because the 5 miles below it, the 10 miles starting to trend under it, and the market price is below it. So that 20 mile will be pulling down. Okay, and with that 20 mile pulling down, that opens the lower Bollinger. Now that might open it a little more vertically depending on how much or how aggressive the selling is from this level. But we do know that this is starting to open up. Okay, so we're starting to see that, okay, there is a little bit of a correlation going on here. We're seeing that our weekly time frame has our 20 mile pulling downward, just that a little bit better. Our monthly time frame has the 20 mile right in this range, and it's pulling up towards us. The weekly time frame has our lower Bollinger opening to the downside. So our room is really starting to be right in this range. Okay. Now, correlating this back to the daily time frame here. What are some of the very key levels we do have that are starting to line up with this? Well, we have our lower Bollinger, uh, aligning with our weekly lower Bollinger. We have the 5 mile starting to pull down to this level. We are actually below the 200 mile in terms of the market price, the 5 mile, the lower Bollinger. So we're starting to see the daily time frame moving averages pulling into this range as well. So we could fairly safely say that very likely we're going to be trading in this range unless we see a major shift in the trend. But with the current trend, this is telling us that we should be pulling into this type of area. Okay. We have the 20 mile currently at the 671 on the daily time frame. That will be actively continuing to pull downward each and every day that we're below that level. So with the market currently being at this 656 range, excuse me, 657 range, then that still means that we're going to be continuing to pull the 20 mile down as well as the lower Bollinger, the 5 mile, the 10 mile. Everything's going to be continuing to pull downward. 5 mile might pull up very slightly, um, basically closed at that level, slightly underneath that level. But in terms of correlating the move, we can see that very, very likely there's going to be a move up in here. Now, with our structure, and I just want to turn off the moving averages for a moment, what's a very obvious structure we have right here? We have this big inverse cup. Now, prior to this inverse cup, we have this major head and shoulders. Okay, so what is this starting to create? This is starting to create the liquidity for a major head and shoulders to the downside. Now, what's below that right shoulder? It's that 20 mile move we're talking about. So correlating everything together with the current trend, and again, this is the trend basically since January, um, going off of right there when all the previous bullish structure broke. This is going off of the last 3 months to current. This is showing that very likely we're going to be pulling upward, building some liquidity in here, and very likely dropping back downward. With that monthly time frame telling us that 20 mile move is very likely coming, within the next 3 to 6 months, roughly, then this is all correlating very much into very likely we're going to be seeing much, much further downside. Okay. The the white box, just to cover this again, the white box is from the monthly time frame. Okay, and this is correlating a 20 mile move. Okay, and we can see that, you know, generally within the monthly time frame, we're going to be testing that 20 mile roughly every 20 months. I want to say days, but that's not how it works on the monthly time frame. Monthly time frame, roughly every 20 months. It's been 12 months since we've tested the 20 mile on the monthly time frame. So that means very, very likely within the next 3 to 6 months, we should be testing that range. Okay, so that's what that white box is. I probably should put it in a dark purple just to kind of signify that's on the monthly time frame. I want to put that in a darker purple to show that. Now, this weekly or this yellow box is the weekly time frame. This is showing that currently we are between this lower Bollinger that is continuing to push to the downside and this 20 mile that is continuous or continuing to pull downward. Um, we would need quite a lot of market action above this range to start seeing the 20 mile pulling upward again, to start seeing the bottom Bollinger closing up and pulling upward towards the upside. So currently we know that the 20 mile will continue trending downward on the monthly, on the weeklies or on the weekly. On the monthly, the 20 mile is trending upward. So it's kind of boxing in this area of where the market is wanting to trade in this range. Okay. So that's what that yellow box is trying to signify is that very, very likely That's the range the market is trying to aim for. Now, can it have some massive bounce and pull back up here? Absolutely. Um, but we're not anywhere near that. We have so much unwinding with the actual moving averages themselves. And just to kind of show this, the 5 mont really likes to be tested almost between every single moving average that is tested. So if we're going to see, this is actually a very great example right here. From the lower Bollinger right here, we see the 5 mont retested. After that 5 mont retest, either we can head down to the lower Bollinger again, or we can start pulling back upward. We pulled back upward, retested the 10 mont on the daily time frame, had a rejection, retested the 5 mont again. From that 5 mont retest, rejected into the lower Bollinger. So you're very likely going to be seeing that 5 mont almost between every single move. So that means if we're actually heading to the upside, we should basically from that lower Bollinger retest the 5 mont, potentially seeing rejection here, but I'm still considering this a 5 mont retest. Head up, retest the 10 mont, very likely come back down, retest the 5 mont, head back up, retest the 20 mont, come back down, retest the 5 mont, rinse, repeat. The 5 mont is really kind of that binding glue in between each and every move. Um, so we can count on that quite a bit. So even if the market might look, somewhat bullish right now from the narrative and everything, the algorithms are still going to be keeping us fairly pulled down for a while. Um, we'd have to be seeing massive buying for a considerable amount of time to really unwind these moving averages to show that, okay, we're going to be really buying to the upside and breaking out of this bearish pattern. But currently, this is showing that very likely this market wants to trade below this 200 mod range. Okay, and that's on the daily time frame. Oops. Oh no, so these are fairly vague. Um, we're just being very vague about where these levels can be trading at. Okay. But the reason why we're vague is because, we're not trying to call the exact top and bottom because you really can't. You have to trade the trend. And currently the trend is telling us that extremely likely it wants to head to this level. Okay. Um, what this level is, obviously this is a huge level. This is all the way from, where do I have it marked? That's 624 all the way back up to that 685, 686 range. So we have a lot of room to still be trading in here. From the weekly time frame, the monthly time frame, everything's really correlating that we should be trading within this range. And as the market is trading in between this range, this 20 mile on the weekly time frame is going to continue pulling down towards us, and the 20 mile on the monthly time frame is going to continue pulling up towards us. So the movement in between here starts to shrink, depending on how long this goes on. So say we're trading out, in July, then this move shrinks even further, if that makes sense. So that's how you can kind of read the trend. But in the current moment, it is telling us that we will be trading still within a fairly bearish pattern. There should be no real expectation just yet to see some massive buy to the upside. And I just kind of want to look at this on the previous sell-off as well, just to make sure that I'm not saying anything incorrect here. See, with this previous sell-off, we started to see a lot of bullish structure at the bottom here. And that's really when we started to do our massive buy-ins. So far, we're not seeing bullish structure yet. Even right here, nothing really major yet. Um, potentially that's actually an inverse cup to the downside. So, um, this trend is a little different compared to what we saw in earlier 2025, where it was just a very deep sell and a very quick buy up. Not really expecting that at all, even though a lot of people are expecting the oil volatility to, um, really ease up and cause the market to have a massive buy up. But we know that the Bank of Japan has almost daily been stating that they have to do an intervention on the yen very, very soon here. And that means that they're going to have to sell equities, have to sell Bitcoin, basically have to sell quite a lot of securities. And very likely, that's how we get that right shoulder. Okay. Um, at least that's the thesis anyway. Usually, these selling events tend to last a minimum of about 2 months. We've been seeing this selling event lasting about that time so far. Um, However, we're not seeing major buying out of this event yet. We're not seeing any signals that are really showing that we're out of the woods in terms of the selling. So for the SPY overall, we should really be expecting that move up towards the 20 month, and this is again on the daily time frame. Do want to hide the drawings for a moment, but we really should be expecting that move up to the 20 month, expecting some form of rejection, seeing this upper Bollinger that has been very sticky starting to pull downward, and from that upper Bollinger pulling downward, then we could start seeing, potentially retesting that upper Bollinger, a few months out from now, retest the upper Bollinger, have a major rejection to the downside. So that's what I'm looking at for the SPY. If there's any questions about this, I will head to semiconductors next. Realistically, what I'm trying to really get at though is that this 20 mile level is very, very ideal. Okay, and I really want to mark this differently from these previous ones, is that this 20 mile level is going to be a very, very good buying opportunity to the downside. With our monthly moving average, our monthly 20 mile pulling upward, that is telling us that the market does want to gravitate towards that point very, very soon. Soon could be multiple months out. So buying leaps at this point is ideally what I'm going to be trying to do. I want to target hopefully September. Um, that would really catch the large majority of any of this selling that's going to be coming in the bear market that I assume is coming. Um, Hold on. Yeah, I mean, I really like buying this 20 mile range on the daily time frame here for the downside. Generally, I would try to wait for the upper Bollinger. But with this type of move, we need to see the market consolidate within this range quite a bit. We need to see this upper Bollinger pulling downward. We need to see this lower Bollinger continuing to open to the downside. Yeah, very likely that 20 mile range is going to be extremely, extremely good for puts. Could we potentially go above it slightly? Yeah, I think so. Um, but I do think that the market is trying to gravitate below this 200 mile. Because remember, this 200 mile is still going to be pulling upward for quite a while. Okay. Um, is it likely we're going to be seeing massive buying above this range anytime within the next 2 to 3 months? I really don't think so. Could I be wrong? Absolutely. But I know that we don't have NVIDIA earnings, I believe, for another 2 months from now. So really nothing um, to catalyze a massive push out of this. And remember, we were already starting to sell off before the conflict even started. So everyone is thinking that we're going to have some massive buy up um, the second this conflict is over. I disagree with that immensely. Um, I think that, really this is kind of not the beginning, but we're not near the middle or the end either. So still plenty of downside. Yeah, very welcome. Okay, so I do want to go over semiconductors and tech, and these ones I will go over a lot quicker. I do have some levels written out. Now, this one on semiconductors, this is the weekly time frame. Hold on, I want to go to the monthly time frame. Now, on semiconductors, it's been not exactly this whole 20 months since the last 20 mile retest. So am I expecting semiconductors to pull down all the way to this range? Not really. What I am expecting is semiconductors to potentially start pulling down towards this lower Bollinger on the weekly time frame. Okay, we're starting to challenge this 20 mile range. The moving averages, and let me just go ahead and hide the drawings for a moment, and this is the weekly time frame. The 5 mile is starting to pull downward from here. Now, is it possible we could see some major buying for multiple weeks to pull this 5 mile back upward? Yes, it can be possible. However, it's extremely likely that instead it's aiming to form this inverse cup to the downside. Okay. Um, we already have the structure for a very large head and shoulders on the daily time frame. Yes, this can pull up quite a bit more, but this is really what I'm looking for is for that downside. It can pull up towards that upper Bollinger. We are seeing some of the movement that I'm looking for out of the SPY, where we're starting to see that upper Bollinger pulling downward, starting to see some of that consolidation in there where the market can pull up, take that upper Bollinger, and it would still be bearish. Okay. We're still seeing the 20 mile, 10 mile, 5 mile pulling well below this 50 mile range, and very, very likely that trend is going to be continuing for quite a while. Now, we can start to see buying. Weekly time frame, we do see how the 20 mile has been tested in here. And generally, when you retest the 20 mile on the weekly time frame, you do tend to see some buying. So, is it potential that we can see some major buying in semiconductors from here? Yeah, the potential is there. So, with this trend, while I am looking to the downside, I don't think that, again, I don't think that we're going to be seeing just complete downside here. This is telling us that very likely we do see some upside buying before further downside. And the reason why we can expect this right shoulder in this range is because with this upper Bollinger pulling downward, and again, this is the daily time frame, the upper Bollinger is pulling downward towards us. So even if we do pull up towards the upper Bollinger is generally when you short. So that would give us that right shoulder. Just a few examples. Upper Bollinger short, small short, but upper Bollinger short, almost upper Bollinger short, upper Bollinger short. So, rinse, repeat, but the upper Bollinger is when you get bearish. So if we're going to be seeing this potential buying, it's going to look bullish, but it's still going to be fulfilling a lot of our bearish conditions. Okay. So on the weekly time frame, we can be seeing a little bit of a bounce out of semiconductors, but the overall trend should be that we should be seeing some downside, especially when we see that on the monthly time frame, we have been pushing this upper Bollinger quite a while. We've had multiple upper Bollinger pushes in here. And let me go ahead and just delete all the drawings here for a second. But we've had multiple upper Bollinger pushes in here with 5 mile retests, re-pushing to the upper Bollinger. Okay, and that's something that we generally see within bull markets, but we don't see usually it being so extended. So with it being extended, the downside retest is starting to become quite possible. Okay, so that is something I am looking at. Here's kind of that example where we see that upper Bollinger push, 5 mile retest, back up to the upper Bollinger, and from that, again, this was an extended upper Bollinger push, massive downside. So I'm not fully expecting this to happen, and this is the monthly time frame. Not fully expecting this sort of action to happen, but can we be pulling down towards this 20 mile here? Very potentially. The potential is very large. Um, it would align very much so with that 3 to 6 month time frame that we're looking at. Can we continue to push from here? We can, but it's very unlikely. Again, even during some of the most aggressive bull markets we've had, um, we do not see very, very extended upper Bollinger pushes. So can it happen? Absolutely, but I would not put my expectations on that, which means that on the monthly time frame, that puts our move about right there. Okay, taking that to the weekly time frame, we see that pretty much that's trading right between where our moving averages, or not our moving averages, but our Bollinger Bands are trading. Um, slightly below where the middle Bollinger or where the lower Bollinger is, but this correlates very much so with this lower Bollinger on the weekly time frame pulling upward and the market trading towards that price. So we can keep this target right there. I want to go ahead, delete that, delete that, delete that, and just for the sake of it, on the weekly time frame, we will tap the upper Bollinger as well, taking this to the daily time frame. We see that this would push us considerably above the upper Bollinger. Um, roughly a whole $15 above that. Do I expect that type of movement? Not really. Um, that'd be very, very extreme. So in reality, the movement is kind of right in there. Well, what correlates to that on the daily time frame? A head and shoulders. Because from the upper Bollinger, that's when the market gets bearish. Upper Bollinger is when you short, create that right shoulder, and all of a sudden we're in major bear territory again. So I saw that message and I'm going to answer it. So I would be trying, there's a couple ways you could do this. Okay. If you're really trying to go for major account recovery, and let's just use semiconductors for an example. You basically have to take the trade at that lower Bollinger, going calls to the upside, or shorting from that upper Bollinger to the downside. Okay. Now, from that point, you have to basically hold that position through any sentiment, through any nonsense, right for that 20 mile range. Because again, just like our 5 minute time frame, our exit truly is trying to target that 20 mile. So you would be either taking calls from the lower Bollinger to the 20 mile, or from the upper Bollinger taking puts to the 20 mile. So it works exactly the same, which, again, this circles back towards the moving averages will really play towards every single time frame the exact same way. You just have to take the trades a little differently. Um, so that's the only way I would do that on, trying to take a dated position. Now, you do know how to play the 5-minute time frame very well, and I think that you need to just focus on your strong suit of playing the 5-minute time frame. If you follow your rules very, very precisely, and just looking at semiconductors here, here is today, and let's go ahead and delete this box for a moment because I want to draw in here without being all blocked off. So just using semiconductors as an example. When today opened, we saw that massive push into the upper Bollinger. This would have been a really great short to that 20 mile. And I know I went over this with you earlier, but we're just going to cover it again. Okay. Because I do think you need to see it. From that 20 mile exit, there was another short opportunity here. From that short opportunity, did not get to the 20 mile here. Okay. So this short would have been a little sketchy. Now, the entry would have been great, but the exit, not so much. This would have been a little bit harder to have exited properly, as soon as basically we start getting to this range, you start buying upward, and all of a sudden, what do you continue holding, waiting for that 20 mile, or is your put blown out of the water? Well, at that point, you get one other opportunity just barely above that 20 mile range before it completely blew off. So this was a position, but it was sketchy. Now, how do you know when to exit a sketchy position? Make it very simple. Okay, let's say we entered right at this 338.57. Well, put a stop loss right there. Don't do it immediately. Do it after your position starts gaining a little value, but put your stop loss right there. Okay. Will you lose some money on that trade? Yes, you will. Will you see your position go from green to red? Yes, you will. But will you lose further money and have this position go to zero? No. And that's what we're trying to do. We want to preserve capital as much as possible. So if we did not get our exit on this trade, then your exit was your entry. Okay? Um, Even though you might be tempted to wait for this upper Bollinger push to reshort or to add to this previous position, realistically, once it's blown out, this position's gone. This trade's over. This trade's done. Okay, you need to be out of those positions. You can't think about it anymore. It's over. Okay. So if the trade didn't work out properly, fine. It's okay. Take the small loss there. Don't take the huge loss. Take the small loss. Be out of your put. Wait for the next position, which does become a very good position. Okay, this short would have been an absolute killer short. Okay, this took you all the way from the it's 340, 322 if you nailed it right at the top. But let's just say we entered at the 342.67. That still would have been a whole roughly $3 of downside before we exited. Okay, that would have been a very great trade. Now, with just these three trades, you would have been green for the day. Okay, even with this trade going sideways, If you didn't exit close to that lower bowl or close to that 20 ma, you would still be green on the day here. Okay. Now we'd be waiting for our next trade, which would be this lower Bollinger right here, which would have been a super, super good call opportunity. That call opportunity would have been, again, roughly a whole $2 of upside. So you have to take each trade for the moment. And if the trade gets out of your grasp, cut out. There's no harm in cutting out of this trade. And this is what I had to do the other day on SPY, which is why I consider it a losing trade, even though it technically was a winning day overall. I actually want to see which trading day that was. Hold on, because I want to show you which example it was. It was, say it was this session right here. Yeah, it was Friday's session, where on Friday, we had that major sell to the downside. Let's see, was it Friday? Hold on. Bollinger. Yes, it was. No, it wasn't Friday. Hold on. I have a really good example. I just have to find the day that it was in. It was this session. Okay. Do apologize for the white box. I don't want to delete that just because that's a very, very important liquidity level. But on this day, okay, and this again is on the 5-minute time frame, we see multiple pushes into the lower Bollinger here without testing the 20 mile. Okay. We see that there's technically three. Now, on this day, I entered in this first one. Okay. Now, we did not get anywhere close to that 20 mile range. Okay. We pulled up to the 10 mile, had a rejection back down the lower Bollinger. I was considering taking more calls at that position, and technically I would have been in the right to do so, but I did not. I don't remember what happened due to that. I think I had to check on my daughter or something. I don't remember, but I didn't take that position. I saw this additional call opportunity open up, and I still had these calls from up here. I did not get the exit completely that that I was looking for, and I did not have the opportunity to close them when I needed to close them. So what happened is that seeing how this call level was completely blown out of the water, we did not get our exit. Technically, we see that we had another entry that did not land as well. I sold these calls up here. I think they were 663, maybe they were 643 or 653 calls at that time, and bought 648 calls back when we were down here. And those 648 calls ended up kicking major butt. Okay, they paid for my entire day of losses. So cut out the bad trades. Okay, not every single trade is going to work exactly as planned, but take the good trades that open up, you know? Um, that's my best advice. You know how to trade the 5-minute time frame very well. Just don't overthink it. Go over your signals each and every single trade and line up those solid trades. Yeah, I have taken exits a little early. Um, sometimes, and I don't have a good example because it's been a few I want to say a week and a half since I've done that, but sometimes it gets close to that 20-mile range, and then I'll take a look at, say, the VVIX, and all of a sudden we might see some spike downward, which tells me that, okay, um, I really need to be out of this put position. That will tell me that, okay, cut the put, be out. It's near my level, may not have hit that level, but other signals are telling me I need to be done with the position. So, um, it doesn't happen often, but yes, sometimes it does happen. It does tend to take a lot of swapping between symbols. So when we're actually doing our live streams, you see how I'm constantly checking the VVIX. Apologize for all the different colors, but I'm constantly checking what's going on with the VVIX. I'm constantly drawing different structures between semiconductors, the S&P, QQQ, really building a story of what's happening with the entire trend of the day. Um, are we going to be able to see those puts that we're taking at this upper Bollinger actually pay off, or is it going to be a position that we're just going to continue burning money on? Um, it does take a little bit of searching around to get that answer, and I know it's not exactly the easiest thing to do. Um, But yes, if you do see other signals that are telling you to cut a trade early, then absolutely go ahead and cut the trade early. There's nothing wrong with cutting out early, and a good example here. Say you shorted up in here, and what this is the SPY. This is 656.19. Say you hit that 656 right on the penny, and we start getting towards this range. Not exactly a 20 mile, but we start seeing the VVIX spike to the downside. So pretend that, you know, this isn't happening right here. We're seeing a major spike upward in the VVIX, which is telling us that very likely we're going to be seeing a spike upward. Well, from this exit right here, this would still give you roughly a whole dollar of downside. Would the put position be massively in the money? Very likely not. Would it still be green though? Extremely likely. Only about, what, 20 minutes have passed, 30 minutes have passed, since the entire entry of that position. So would it be green or at least neutral? Extremely, extremely likely. So would that be a safe exit? Absolutely. Did you make, a killer amount of money off of it or anything? No, but that's not important all the time. What's important is being able to consistently knock these trades out. Um, if you're seeing price action or a signal that's starting to cause hesitation, just exit the trade. Wait for the next entry, because the next entry from here was a massive call to the upside, you know? So throughout the day, you're going to have multiple entries. Some days will be better than others. Some days will be, absolutely terrible. It really just depends on the day and what each day is giving us. But that's why we jump from symbol to symbol and really try to build a thesis of exactly what's going on during the day. Yeah, absolutely. Okay, so let me just quickly circle back to semiconductors. So, semiconductors, the real expectation, again, should be that very likely going to be building this right shoulder. From that right shoulder, very likely going to be targeting some of these downward structures. We have tons of them on semiconductors. Not that I think that, semiconductors are really a massive short. I think out of pretty much the entire market, semiconductors are going to be one of the strongest holding positions you can have. And that's really because semiconductors fill a lot of the gaps in terms of growth and overall holding that growth compared to a lot of these tech companies. Um, they can continue selling the shovels even if the gold rush starts to slow down a little bit. People are still going to be buying their semiconductors for an extremely, extremely, extremely long time. All they have to do is release a new series, start slowly outdating some of these new one or older ones, and all of a sudden, you have your semiconductors having massive weight again. So I'm not expecting a ton of weight to exit out of semiconductors, but I am expecting, a pretty large bit of selling to occur overall. And in correlation to that, going over QQQ, moment, see what we got going on for QQQ. Do have a lot of drawings from the day trades, I do apologize. But on QQQ, we've been building some extremely, extremely good bearish structure for quite a long time now. We just finished closing this very large inverse cup as of a few sessions ago, and we talked about from the bottom of this cup, very, very likely we're going to start seeing buying and bullish structure to at least start pulling up towards that 20 mile range. Now, the 20 mile is currently basically right at that 600. The QQQ is currently at 587.60, so we're not very far away from that range at all. We do have this Head and Shoulders building here, which has somewhat taken off, so I am kind of really expecting new structure to start playing within this range, which very likely would be some form of, Head and Shoulders, inverse cup, and handle, something like that to continue pushing us to the downside. And with this, we will be seeing the upper Bollinger start pulling downward as well, because now we're starting to see the 20 mile pulling downward. So a lot of this selling in semiconductors, well, within QQQ, excuse me, has been creating massive bearish structure. Yes, there's still a lot of selling going on, but we should be seeing a slight reprieve, which again, this can be due to the potential ceasefire, everything else, but this is still telling us that our trend is very, very heavy with selling. We see our ADL still moving down very, very aggressively, and it's been moving down since the beginning of the year. Um, Really, we've been seeing a ton of weight exiting uh, tech out of excuse me, we've been seeing a ton of weight exiting out of tech and entering into semiconductors. And I wish the computer Weeble would let me compare the two graphs. But since the beginning of the new year, we see, let's see, massive buying to the upside and some consolidation. And this is semiconductors. Whereas QQQ, since the new year, we've been seeing that consolidation and selling. So QQQ does have some room for some buying towards this 20 mile. I don't think that the daily upper Bollinger is really within the question right now. On the weekly time frame, we see that, QQQ is starting to push within the lower Bollinger. Within the lower Bollinger, again, we should be seeing some reprieve. You could see that back in April or, February, March, April of 2025 here. Some of that reprieve didn't pull all the way back up to the 20 mile, but there is some of that reprieve. So we should be expecting almost the exact same thing in here prior to further downside. Monthly time frame. Let's see, it's been so 13 months of, you know, price action since the last monthly 20 mile test. So that is correlating quite a bit with, the next 3 to 6 months seeing that 20 mile being hit. And I just want to pull that upward for a moment. And again, on our weekly time frame, this is correlating very much so with this, you know, block of liquidity that we're talking about building that further structure into. Um, we're expecting that bearish structure to start building in here. Very, very likely take us down towards that monthly 20 mile range, daily time frame. We see that exact same correlation. Very, very likely that's what's going to be occurring. Yeah, absolutely. Once we get to, and I want to mark this out. Once we get to the upper Bollinger on SOX, taking some SOX calls for potentially months out could be extremely, extremely good. Um, again, I don't think that we're going to be seeing this massive buy up like people think that we are, like we saw last year in early 2025. I don't think that's what we're seeing right now. I think that a lot of the monthly trends, a lot of the weekly and daily trends are telling us that our downside is still massive. And let me see. I did say I would cover HIG first, but I clicked liquid, so kind of the same thing. They're going to be covering the same thing here. But even within our corporate credit, it's telling us we have bear structure. I know that cup didn't really cover that perfectly, but you understand the point. Bear structure, a break of this previous bullish structure. Okay, so that is telling us that this is a confirmation within this bear structure right here. I don't know why that's yellow. That should be that. So extremely likely our downside within corporate credit is still very large. Okay, even if we do see some reprieve here, the expectation should be to be taking towards the bottom of that channel, which within equities, that would still be a considerable amount of selling. So this is showing us, exactly the same thesis that we're seeing within SPY, QQQ, semiconductors, that the selling really should be picking up, and that very, very likely we're not done. Even if we do see a little bit of a reprieve, which a lot of these symbols are saying that we can be seeing. Same within the HIG, and if you're keen, you'll be able to see that on the daily time frame, there's a very massive head and shoulders starting to build. This goes almost hand in hand with what we're seeing on the SPY, what we're seeing on QQQ semiconductors. Um, a lot of different symbols are telling us that our downside is very, very large here. On HIG, we see how the monthly time frame very, very likely wanting to push down into this lower Bollinger. Weekly time frame almost did a 20 mile test there, but actually didn't hit the level. So the actual technical last 20 mile test was way back in 2023. So is there room for HIG to have, considered considerable further downside? Absolutely. Are we building the structure to see that? Absolutely. So on our daily time frame, should we be expecting this right shoulder? I think the answer is absolutely. So that's what we will be looking for. Yes, I do agree with that. Our time frames, just going off of this measured move, and let's go off of our previous measured moves here. Really want to start getting the breakdown of the previous bullish structures. should correlate into that range. Sorry, this isn't going to make sense for a moment. That really starts pull us towards that 77 range, towards that October-November timeline, which that would definitely, correlate with continued selling. That's assuming, we get that right shoulder building out. From that right shoulder, very likely build an inverse cup, head down. So the thing about the bear market is that, and let me really go back to 2023, 2022, 2023. And this might show a little better on the weekly time frame. Our corporate credit tends to ride the downside quite a bit, and it tends to chop. What our corporate credit and high yield credit has been doing for the last essentially 2 years now has been having a massive breakout. Okay. If we're going to be seeing this bear market type, price action occurring again, then, we have considerable amount of room to the downside. So that's kind of what I'm thinking overall. Um, why I'm really expecting between the next 3 to 9 months for us to really enter that bearish market. And something we know for a fact is that the Bank of Japan is very, very, very heavily waiting on this Iranian conflict to end. They've been saying almost daily that they need to intervene within the yen. Well, what happens when they intervene within the yen? Let's quickly show that. These were the previous yen interventions, and this is FXY. I know this kind of skips us around a little bit, but we're going to talk about this now. Um, this was the yen intervention of 2024, back in July through, I want to say, end of October, something like that, middle October. Um, Massive yen intervention. This was massive selling in terms of equities, and I'll show that correlation in just a second here. Um, this was 2025 from January to April, and now we're seeing the yen pushing down basically almost to all-time low levels. Now, that means that our selling is going to be very, very brutal. Okay. Um, the yen is telling us here that we have an enormous amount of selling that is going to be taking place. Now, to really correlate this, and I did delete my drawings on SPY, so maybe I will have them on the SPAC still. But if not, I could just easily get them up. Um, no, let's put this on the SPY. Here was that previous event. It's positive. Yeah, that was that previous one. SPY saw price basically from that 560 all the way down. It says 500, but it was a little above that. It was around the 507, 508, if I remember correctly. So basically a full $100 downside, just about. That was that first intervention. Second intervention, while it was included with a lot of tariff selling, um, we saw the SPY go from the 605 roughly all the way down to the 476. This isn't including the dividends. It was actually the 479, and I want to say this was the 608, if I remember correctly. Um, But again, this is showing two massive moves to the downside just through the yen intervention. Okay. Now, we know that the Bank of Japan desperately needs to intervene, and that hasn't even begun yet. So, this is all correlating very, very much so with we should be expecting quite a bit of selling over the next 3 to 6 months, well, 3 to 9 months. We should really, really be expecting quite a bit of downside. Now, with the DXY, and this is why I wanted to bring this up really quick. I can find it because I'm blind. With oil being elevated, and this will actually be a really, really great segue into oil. But with oil being elevated, this is going to continue pushing our dollar upward. Okay. Every time the dollar gets pushed upward, it heavily leans against the yen. Um, generally you short the yen to go long the dollar. Um, the previous times we've seen this happen, uh, it's caused massive, massive chaos within the economy. Um, Now, one thing that's a little bit conflicting here is that when we see these unwinds occur, is that usually you see the DXY drop. The reason why is because all this selling from, them selling securities, they enter into dollar positions, meaning that the dollars in circulation decrease temporarily, which is why you get that boost upward. But then they enter into the yen, which means that there's a plethora of dollars within the system, which decreases the dollar during that period, which is why we saw, you know, massive decrease in the dollar during this period. And this is that, January of 2025 through April. And back in here, I won't say very likely, this is that unwinding. So it's back in here. Let me go ahead and adjust this just a little bit. But it's back in here where we saw, that major yen unwind. So realistically, while oil is pushing up the dollar, we should be seeing eventually that dollar pulling back downward again. Okay, so the dollar overall should be pulling back down towards that 95 range, which even though I will segue into oil in just a second, this is also telling us that the yields are going to be pulling back downward very, very greatly. This is a major misconception that many make within treasuries and the yields that oil prices cause inflation. What oil prices really cause is very, very temporary inflation into massive deflation. Almost every single time we see the oil prices rise very, very drastically like this. Let me go to USO. Now, the prices are going to be a little wonky just because they do have splits and everything like that. So we're not going to be going all the way back, but we are going to be going back at least to 2018-ish. So let's see. One thing we saw prior to the whole COVID, 2019, is that there was actually oil volatility occurring in here. Now, that volatility, and while I wasn't fully actively trading at the time, going back and reading the news cycles and reading everything about this, many were very concerned that this oil volatility was going to basically start climbing up to 120 plus a barrel. I don't remember what event this was, but this was some sort of, Middle Eastern conflict or something like that. This weighed greatly on the economy. Now, granted, obviously COVID did as well, but almost every single time we see a major spike in oil volatility, we see a massive crash in the market. Previously, back in here, 2018, we saw some increased oil volatility as well, which let me go back to the SPY. Right in here. Even though it doesn't look like a massive crash within the SPY, technically at the time, it was a very, very deep push downward in the SPY. The SPY went from essentially that 252 range is above that, not counting the dividends, you know. Um, but within the price, shown, it went from the 252 all the way down to that 222, which for the SPY at the time, losing $30 is a huge deal. Okay, I mean the SPY was only $250 at the time. That was a massive sink within the SPY. Um, and you could go back to almost every single oil volatility event. I don't want to delete all the drawings and correlate these back to massive, massive sinks within the SPY. Let's go back to USO because I do want to show a few more of these. Let's go back before the whole yen intervention in 2024. Let's see, 2024. We did have some events going on. So it was right back in here when I forgot which ship was boarded. But there was a ship boarded in the Strait of Hormuz, and it caused a massive spike in oil prices. Okay, and really showing this, USO at the time went from $70.70 all the way up towards this $83. Now, this is the weekly time frame, so that was a lot of oil volatility. Oil prices spiked quite a bit. That was elevated for a very long time. And during this elevated spike, the Bank of Japan was constantly stating that the yen was needing an intervention and everything else, and that they had to wait for the oil volatility to end. There's many articles about it. I would love to bring it up right now, but I don't have that prepared. But this is something I was looking at, is that the Bank of Japan was waiting for the oil volatility to end so that they can unwind positions as well. Kind of exactly what we're seeing right in the current moment. So this caused, a very large amount of selling within the SPY during that time. Now let's look at the early 2025. We see oil spiking all the way up to $85 a barrel um, from the 73 range. I don't remember exactly what happened during that time, but I do know that from this oil volatility, we had, roughly 3 months of selling, 4 months of selling. Um, am I saying that oil volatility plays one to one with every single correction? No, but oil volatility weighs very, very, very heavily on corrections within the SPY, or the market overall. So when we see our oil doing this is deeply concerning. Okay. Um, it's extremely likely we're not out of this yet. Based on everything I've been hearing, I know that there is talks of potentially a 30-day ceasefire. I personally think that that will go through, and I personally think that our side will breach that and very likely try to, you know, take out some of their leaders again or something like that. Um, I don't think that we're here this time to reach a peace deal. That might just be my personal bias, but just based off of how we've been seeing this conflict almost every single time, there's been word about we're going to be reaching peace, oh, we're talking to their leaders. That has been either a massive lie to cause a major, a conflict in the information that the other side is seeing, or it's been, just appended almost instantly, and the other side says that, the talks aren't taking place. Um, it's hard to know what's true right now, and obviously we can't really believe Iran, but it's hard to believe when the enemy is saying that no, no one's reaching out to us. Now I know as of current, they are saying that we are reaching out to them and that we are talking to them, but I don't think that everything's gonna play exactly how it is. See, 20 now the 2030 year is at, let's see, I wanna see, and I wanna go over the 1 month trend, the 1 year trend on this. Now we're definitely gonna be seeing our treasury yields spiking a little bit. But one thing that I do wanna show, which I wish they would allow me to draw on the yields, they don't allow me to. There's a few things I want you to look at, is that once the oil volatility stops spiking, we can almost attribute every single one of these drops in the 30-year yield to the oil volatility dropping. Um, for example, let's go back to, let's see, 10/20/23. Then on USO, can find the symbol. 10/10/23. You can see on the weekly time frame, I go to the daily here, 10/10/23. You can see there was a peak in oil right there at 10:07, and as of 10:10, we start seeing the oil volatility being heated. So oil is really, really important, and it's something that I didn't really realize it was this important until not too long ago. But again, almost every single spike in oil is very, very quickly defeated. And after it's defeated, it's usually a massive sink downward. Um, let's see, sorry, my wife's in here. Um, Usually it's a massive sink to the downside. Once we see that oil volatility spike out, we see that within the treasury yields, we see that within overall equities. We really see that throughout the entire market. So oil is extremely important. Hold on, I'm trying to go back to USO. So oil is extremely important to watch for that. Almost all the volatility spikes we can attribute to oil as well. Not every single one, obviously. Um, but I do want to take a look at the VVIX, or not the VVIX, the VIX. But a majority of these major spikes in volatility won't be attributed directly to oil, but usually we start seeing volatility starting to climb once oil climbs. Now, let's pull up a few examples. So, during the major unwind, so right in here, start seeing volatility spiking, pulls down, starts spiking again once the actual oil volatility starting to cease. And really, we have the full breakout on the Bank of Japan unwind. Let's go back to, just go back to a random spike in here. Let's go back to 12/19/2024. See what's going on with oil in 12/19/2024. So 12/19/2024. See the oil pull down slightly before really going parabolic. And within the VV, or within the actual VIX, then we start seeing the VIX spike in there all the way until 11/4/24. Going back to the USO, see 11/4/24. Yep, and that's when we start seeing oil start calming down, really have the massive spike on the 5th, and then start calming down from there. Anyway, what I'm trying to say is that there's a correlation between volatility and what happens with oil prices as well. Now, with oil being so heavily elevated, I want to look at the VIX one more time. Now, one thing I do want to show, hold on, the previous bear market here, then the VIX. Now, what's really important is that we pretty much stayed above this $20 range for quite a long time. During that bear market, we only pulled below it just a period of times. Um, that's kind of the current conditions I'm expecting out of the VIX, with oil being this elevated. Even if we start seeing it pulling back, we do have the Bank of Japan unwinding event that's very, very likely going to be occurring right after this conflict starts to settle down. But that's very likely what we should be expecting out of the VIX. Now, in the daily time frame, sorry, I know my analysis is getting kind of thrown off course. In the daily time frame, it's actually a really good opportunity to short the VIX when it's in the upper Bollinger and try to ride it all the way to the 20 mile, because that's something that you can consistently do. And looking at the bear market here, just drag this down a little bit so we can better see. This happens quite a bit. So we have a large spike in volatility, pulls down to the 20 mile, wait for the spike of volatility again, pulls down to the 20 mile, wait for the spike of volatility again, pulls down to the 20 mile, wait for the spike of volatility, Pulls down the 20 mo, rinse and repeat, rinse and repeat. Very consistent positions to take. So again, this would be shorting the VIX rather than taking calls. Um, Little bit more reasonable in terms of timing it rather than just trying to time, random volatility pops. So that is something we can do now. Actually, heavily suggest that a lot. Yeah, I know. So, I don't know. Might end it here and continue the rest tomorrow morning. But I think that gives us a good basis to start with. And tomorrow we can go over precious metals and the rest of treasuries and everything. But really, this is the key part here is that this 20 mile retest is going to be an extremely, extremely, extremely good opportunity. Even if we push above it slightly, taking leap positions at this 20 mile is going to be very, very, very good. So that's mainly what I want to get across. Um, don't miss this opportunity when it comes up. I don't know if it will happen tomorrow. I don't know if it'll happen a week from now. We haven't tested the 20 mile since I believe March 4th. So technically it has been a full 20 days since we've hit that level. So we are within the conditions to push back up and retest that level. We've again had this lower Bollinger move happen 3 times now without that 20 mile retest. So it's extremely, extremely likely the market is going to look for that reprieve before continuing downward. Especially that we finished this inverse cup here. We were looking for bullish structure at the bottom to break out. Not seeing the best bullish structure, but this is an inverse head and shoulders. This is telling us extremely likely that we are going to try to take this level up to that 673. So that's what we're going to be looking for. I don't really expect, again, a further rejection back down to lower Bollinger. Now, it can happen, but I expect that from that 20 mile range rather than from, the 10 mile or 5 mile range we're at now. We can continue further downward from here, but I would, again, fully expect that 20 mile range before the further downside. So, yeah, that's what we got going on. If there's any final questions or anything, I'll go ahead and answer that. But I will be streaming in the morning, so uh, besides going over the day trades, we can go over some of the long-term trend as well. But yeah, if there's no questions, then I will see everybody very, very likely around 9:20 a.m. I usually try to be on a little earlier than that, but it doesn't happen. Yeah, you're very welcome. Sorry, I'm super tired, so it may not make a whole lot of sense, but um yeah, I'll be on. I'm gonna try to be on a whole 15-20 minutes before they open, but can't promise that, but at least we'll catch the open and go over some day trades from there, and after that we can go over some long-term stuff. So yeah, have a good night, everybody. I will see you all in the morning, and yeah, take care.